Okay, yeah, nice. We should be live. Ooh. Guys, welcome back to TrinFx live streams. Sorry for my absence for the past couple of days. Well, for the starting of the week, really. I've been busy doing some stuff, some personal stuff, getting things in order. But we're here. We're back at the New York session live streaming. And yeah, let's look for some trade setups, right? So I have been trading since the week started, and it's been okay. Not as great as I'd want it to be, but you know, that's all part of trading as well. You know, we can't really predict the markets perfectly or anything like that. As always, it's just about probabilities and stuff like that. So your trading has been good. This was one trade that we did take in VIP. Price came all the way up here near 3%. Basically came back down, but we had that break even stop, so we took some profits off. Came on break even, was relatively a low risk trade. And then we had Eurocard as well. Eurocard was one trade that we entered. I risked 2% at the beginning, right? Price stopped me out, but then I put a sell stop right at the entry point, looking for price to continue moving down and so forth. And yeah, this is where the trade is currently at. Pretty good. Doesn't make sense being against the US dollar right now, and this is just diving into everything that we have happening and like trades that we could possibly get up into. The US dollar itself has been very hawkish, very bullish. As you can see, the last set of comments that we get from Fed Kirshner. I want to believe that I said that correctly. Let's see, Kashkari, Fed Kashkari, I guess. Yeah, so we had some Fed comments, and you can see here the headline being Fed Kashkara. There is a risk that rates might have to go higher, right? And this is looking at rates currently, what the Fed is looking at. They're looking at the labor market as well, and they're letting these fundamental factors drive the Fed decision, right? So the dollar has been pretty bullish overall, as we could see possible rate hikes in the future as well. So right now it doesn't make sense. They're gonna go dollar bearish on anything at this point in time on any of the dollar cross pairs. If anything, we look for key areas where we could get into the sell side setups of any of the cross pairs. So like 80 USD for instance. If we get a pullback, maybe we could get a continuation along with the dollar bullishness. Your USD is one of my favorites right now, so any sort of pullback we do get on this, continue down to the downside, and yeah, that's sort of what we are seeing currently right now. Same thing for the CAD itself as well. So CAD is pretty strong. You can, as you would know, that the CAD and oil does have a correlation with each other, right? So they correlate and they tend to move in tandem with each other. So if oil is up, usually we see the CAD being up as well. Currently, we are seeing the CAD displaying some strength when it comes to the current market, right? So these are a couple of the trades that we are in, going pretty well thus far. Yeah, well, let's look for possible sells right now. DJ, this is a possible setup for me to continue going to the bearish side, but you can see prices basically kind of ranging, right? So we had these multiple zones where price just kind of bouncing back and forth. We have where price spiked to the downside of this area here, so we pull back, spike down, and you can see we kind of continuing down, right? With that being said, however, one thing I like to note is just that price made this wick down into this area here. Let's just go to the daily and the hourly to see more properly. Yeah, so this is an area that we could pay attention to right here, because we saw that price came here multiple times, and this is a daily chart. So it just rejected and kind of maintained this zone right here, and then pulled higher from that area, right? We can see the same thing right now here. Price did come into the zone, pulled up a little bit. So one of the key things I look for possibly is when price reapproaches this area, we might get a buy setup, right? Obviously this depends on what other fundamental factors we do have that may influence the price action movement, but from the technical aspect, this is sort of what you pay attention to. Price could possibly drive even further down, making this trade a high likelihood of seeing price continue further down into this zone here, right? But for now, I would say just this ranging sort of price action movement, not the best for GJ, right? So obviously this would be like a no trade situation right now. Okay, just to follow the rules, right? Clear trend. We have a trend, but it's not really that clear. The price action movement by itself is very choppy, so it's not the best kind of trading conditions you want to get yourself involved in, unless you're something like a scalper and you want to scalp like the range between up here and down here or something like that. I don't know, whatever tickles your fancy, right? But for me, it's a no trade zone situation right now. A lot of the currency pairs just ranging, kind of, right? USD CAD. So let's take a look at the USD main cross pairs here. Yeah, I think we might be able to get something out of this, right? Gold is extremely pulling, like gold is extremely down. Right, so gold is approaching the August lows here. Right, so maybe we might be able to get a setup out of that in the future. One thing as well to note, Bitcoin just rose right here. Bitcoin just shot to the upside, and you can see Bitcoin is actually like 3 times lower than what it was at the peak, which is very interesting, I think. So at the peak, Bitcoin was at like 67,000, somewhere around that, and now this was what at the height of COVID, when COVID was rampant and everything, and we started doing more crypto transactions and stuff like that. So Bitcoin experienced extreme rise, and you can see from right here, right? So from 2020, 2019, see this was 2019 here, right? It was like at 9,000, which seems like so long ago, right? But it was just like 4 years ago, right? So Bitcoin was at 10,000 around at 2020 the starting, and it just completely rose during COVID. So you can see how like these different like factors can really affect something, and Bitcoin just pushed all the way up. Now imagine it was holding somewhere here at the height when we thought it was the height of Bitcoin being 10,000, and it's like, wow, $10,000 to buy Bitcoin, bro, that's crazy. And you're like, I'm gonna wait for it to dip some more, you know, maybe to like 2,000 or something like that for me to buy. And then it just starts shooting off during COVID. Just boom, price just pushed all the way up here. This was at the peak, let's say around right here, right, starting of 2021. Then it dipped here, right, then it peaked again, and now we're back down here as COVID is, you know, basically it's still talked about, but it's not as extreme as it once was. After we have all the vaccinations and stuff coming out, really things have calmed down, and we're coming back into trying to get civilization how it used to be pre-COVID. So right now, I do think that slowly and surely Bitcoin would rise back to those highs. However, right now, you know, we have to focus on the short-term targets. One such target being here, maybe at the height right here, and right here as well. Right, so these are some of the targets that we first have to see Bitcoin come up into, and then possibly continuing for the, you know, however the years progress, we might see Bitcoin reapproach that level slowly but surely. And I do have some Bitcoin investments right now that are actually paying off. However, of course, if the value of Bitcoin does rise, so would the investment itself, and that's what I'm looking to do. Just buy the dips, hold long term to see price continue moving to the upside, and really give me a return on those investments, and just hold it. But it's great. It's just great to actually see that, you know, we are starting to recover overall as a whole. Right. Yeah, but trade setups, I really don't think like it really have much to actually pay attention to, because a lot of the things that we're seeing currently right now are things that happened overnight, right, or earlier during the London session, surprisingly, because London sessions have been basically stagnant. So I don't know. really don't know what to say about all of this. Okay, yeah, one trade. GBP 80. So I'm bullish on the 80 and some of the risk assets right now. However, from a fundamental and technical aspect, you can see overall prices on going to the downside. We have those clear market structure, right, where prices pulling down, pushing back up into, continuing that movement down. This is no different. Very strong clear downtrend. Price entry right at this point. Right, my stops will actually be like right above these highs, right? So right above the candle high as well, have my stop, and obviously my target will be down here. Now I am a person known for using tighter stops than this. It is what's helped me become so profitable more rather than others, because of the tight stop loss, the execution and everything. Usually when we do get into a trade setup, we get somewhere to like around a 1 to 3, 1 to 5 or more, depending on the trade itself. Now this here, just to be more on the safe side, right, because we already came into this area, the current candle is, it have, well, 18 minutes, sorry, till the candle closes, and this is related to the 4-hour candle close as well. So something that happens usually a lot of times around this time, something I've noticed, that we do have the 4-hour candle actually closing in the direction of where the candle formed, right? So if it's a bullish candle, usually we see some sort of pullback. Depending on the currency itself, it might be extreme pullback to the upside, or if we do end up actually closing below the zones that we are paying attention to, then we could see a continuation being more likely to come, you know, in that direction, right? So in this case, for the 4-hour candle, if we actually see price close below this area, we might see some sort of pullback and then a continuation. Right, so at that point, even if you did enter right now, you could also get another entry back into the zone or deeper into the zone for price to continue moving down, setting your stops really right above that same candle, the current candle right now, right? But if it does, if it does close, you know, bearish here, then we should see that continuation, right? Slight pullback, but overall a continuation. This is a key zone. We have multiple retests of this area, right, of this general area. So this would be like one area too as well, and this is one area where we saw that strong rejection actually, right? So yeah, this is like the current trade setup for me. This is a 1 to 5 and 1 to 2.6, right? So yeah, this is a good actual trade setup because you have the overall direction very strong to the downside. It's gonna say brown, I don't know why. Yeah, so pretty strong to the downside. Overall price action looks good. On the fundamental side, we don't really have any indication as to why to be bullish on the GBP currently right now. The pair more so in focus, the currency, sorry, more so in focus is the US dollar and the ECB as well, the euro dollar. So I don't know if you'll actually see it here. I was reading it. Yeah, so we have like stuff with France prioritizing inflation fight, the 2024 budget bill. We also have, well, with Fed hash carry, I want to believe I'm saying that correct, right? So talking about the interest rate, risk of it going higher. Of course, the Fed doesn't want to see a recession, so they're holding rates steady. This is another headline here as well. Holding rates steady and looking at some of the key indicators that they do pay attention to. Labor market, if we're seeing any labor market strikes or anything like that, that would affect the rate at which the Fed does start to tighten their monetary policy. And let me just pop the chart up. Right, so is there anything that you guys are paying attention to, anything that you're looking at currently? Like I said, these are the only thing that's interest me right now. Pretty much going great. Can't complain about the current trades. And we've really been seeing this sort of back and forth with the price action, to be honest. 1 minute price moving one direction, then you see it like swing back. It could be irritating because obviously these are 1 hour candles, and that means that you have to wait for 1 hour for each candle form. And it could be frustrating when you are in a trade, let's say like for example, right, you was in a trade here to the downside, right? Maybe you entered right around here. Right, so maybe you entered right around here as the candle break to the downside, right? You entered on a break, right? And you're expecting price to go down, but you see it does this, comes here, comes here, comes here, and then it comes back up here, right? That could be frustrating, and it could play with your mentality, right? Because obviously when you're seeing price move into, or you have your directional bias, you only see price move in that direction. However, when you do have moments where price will approach back to your entry level, you start to second guess yourself. You're like, what's going on? Is price going to reverse on me? And these are thoughts that I think everybody gets as a trader, whether you're new or you're experienced or whatever the case is. It can be irritating because you waited hours and hours, right, for price to continue moving down because you have your directional bias. However, let's say you sell it last night and you wake up this morning and you see it back at entry. It can be frustrating because you waited all those hours just to see no profits have been made on your current trade setup. And this is part of like where you need to kind of separate the emotions itself from your trading strategy or what you're implementing for yourself, because that would play on your mindset, right? It will play on your mentality. It'll make you make stupid decisions because as price reapproaches this level, right, what you're thinking is, the candles here at the side, right, they form bullish, so maybe price is going to continue pushing up, because that's like you trying to rationalize, how can I start getting profits, how can I start making profits on this trade? So you come out at break even and you're waiting for price to push up and pass here to continue going long. And it's something that happens to a lot of new traders, intermediate, it don't matter your level. It's just something that happens. I guess that's just part of like human emotions, right? We can't really control every single thing. I mean, you can't be robotic while trading, right? Obviously that would be like the goal itself, but more often than not, unless I don't know, unless you have some sort of medical issue where you're not able to process emotions properly, then I would think that this in itself is something you can't always like, separate emotions from your trading, right? Obviously you want to separate it as much as possible, and you do that by being disciplined and sticking to your plan. However, there will be instances where you'll second guess and doubt yourself and whatnot, especially if you're dependent on your personal life and stuff like that. That could affect your decision making process as well, because now you're thinking from a place that I need, right? And that's the thing I would say to anybody that's coming into trading. Don't come with the mindset that you need this to work out, you need this to happen, you need that, the other, and whatever. The markets don't need to give you anything, all right? You want to be smart about it. It's like going to a loan shark or somebody, right? And you're telling them, well, I need so you need $2,000, you need $10,000, you need this to do that. And they're not obliged, right? They're not obligated to actually give you anything, right? So I think of trading like sort of like that. The markets doesn't need to give you anything. You need to take what you can from the markets, right? And do that smart, right? You have to be smart by displaying patience, following your rules, and sticking to what you're doing, right? And consistently doing that. And the thing is that will separate you from a good trader, from a great trader, from a losing trader to somebody that's break even and profitable, is consistency, being consistent with whatever you're implementing. Don't switch up every single time. You experience like 3 losses, 4 or 5. Let's say you have a losing streak, you experience 10 losses, or whatever the case is, and you're just going back and forth with a winner here, a loss here, and so forth. Now, obviously, if you're when your risk to reward ratio is good, it shouldn't matter if your losses equates to the same amount as your winners, right? Because your winners should outweigh your losers. But let's say you have a one-to-one strategy or something like that, and you realize that okay, you had 10 losing, you had 10 losing trades, right? You had a losing streak, That plays in mentality, obviously. It will play with anybody's mentality, right? Seeing all those red numbers, those negative numbers and stuff like that. Especially if you're in a community or group and people making money and you're just the one person losing on trades, then obviously that would impact you, right? Psychologically. And you want to switch up your trading process, whatever it is that you implemented. And it's a common thing that happens to a lot of people. And the thing is, you need to know that, okay, am I switching this up because my strategy no longer works, or am I just experiencing a rough patch? And that's why people backtest. A lot of traders, everybody do have their rough patches, right? Nobody wins all the time. Sometimes you might have back-to-back losses because maybe, for instance, you're not paying attention to the fundamentals. Maybe that's not something you put into your trading. So when it has spikes in certain directions and stuff like that, you're unaware as to the cause of that. Or you trade at just at a timing where it have some major news coming out, right? And you just was unlucky to get caught up in that because that's not something you pay attention to, right? But you shouldn't let that dissuade you from your trading strategy that you've been backtesting, that you're putting time and effort into creating. You should continue sticking with it until proven otherwise, unless something drastically has changed, and let's say 2 weeks, 4 weeks, a month pass and it's like just back-to-back L's or whatever and just 1 or 2 winners, then maybe, all right, at this point market conditions must have changed. You need to update your trading system, but never let it be from a place where it's like just you have a losing streak or you're not making enough profit like everybody else, right? Don't focus on everybody else, focus on yourself. And that is one of the main things that I could tell you that helped me in my trading, just focusing on myself and what I can accomplish rather than looking at other people and what they've accomplished and how can I reach where they are. It's not about that. It's not about where they are. It's about where you want to be, right? Don't focus on them. Don't focus on they having their wins or payouts if you're with a prop firm or something like that. Focus on you and what you're able to do for yourself, right? And just eliminating that would cause a lot of stress to just be relieved from you, because you could fall in habits of envy, right? Wish I was them, what they're doing that I'm not doing. Some people even reach as far as God don't love me. Everybody else lucky, but I'm just the unlucky one to just not making profits and stuff like that. And it's just to avoid all of that, guys. Just focus on yourself, right? Focus on what you could do, focus on your strategy, and just do you. And yeah, you'll be a lot more happier when it comes to trading if you're able to do that and just stick to what works for you long term. And yeah, that's all I have to say. So currently we are seeing the DXY pulling back right now. Yeah, this is 6 minutes to our candle finishes forming. Now, what does this mean? Taking a look from a daily perspective. Alright, so from a daily perspective, candles still forming for hourly. So we could see that our right price is still with that very strong uptrending movement. We can label this as an area to possibly pay attention to for price continuations. Right, and currently on the 1 hour candles, so price pulling back. We could say that maybe we might get a pullback into the zone for a continuation moving up. The dollar, I don't usually like using levels, particularly for the dollar index or the DXY. That's because it doesn't need to pay attention to those rules, right? The DXY or the US dollar currency strength is affected by a lot of fundamental factors rather than, you could technically label it and see where price could go, right? And that's why I just always say that the US dollar is like a manipulated currency, right? It's nice and it has a lot of volatility, volume and whatnot. But at the same time, it has things that you need to pay attention to while trading in dollar. So overall, though, I don't think we have any treasury bonds news or anything like that to come out or to see any bonds selling. So I think we should continue moving upwards, all right, from the current zone. On the technical aspect, if you want to get technical, we don't have any resistance zones to pay attention to that price pulled up into. We passed this one right here. This was a key area. And yeah, price is just continuing up. The next key area possible is possibly like right here. And this was my long-term time. And we're actually halfway to that time because I took that somewhere right around here on the last trading analysis that I did, weekly analysis. I was looking for price to come all the way up here to be possibly, you know, see the dollar trend rise to that area. And we're actually, you know, halfway there. So we might get that happening, not this week, but maybe next week for sure. Right, so I'm still in these, still holding these. Dollar pulling up a little bit. Obviously we're following that dollar strength as well, so you know, when we see that weakness, we usually see that same move on the cross pairs, the dollar cross pairs here. If anything, this would be like one targeted area for me to see price continue moving down. Obviously there's no reason to be bearish dollar right now, so I'm not going to be looking for sell setups against the dollar, right? But looking to go long area so I could go long with that dollar strength. So this is one key area we could possibly see price coming to and continue moving to the downside. Obviously again, this is 4-hour candle close, and same thing like I was talking about, right? With the 4-hour candle close, some things that we notice. Let's pull it up a little bit, yeah. Same thing here. Coming halfway into that zone. So at this point though, yeah, nice area to possibly get into some sell continuations for sure on this particular pair. I got a nice 1 to 4 risk to reward. So yeah, this right here, double up, boom. Nice spot, nice trade, nice trade. And 4 and 2, so 6%. Roughly 6% with a 2% risk overall. Yeah. So this is a trade. This is a trade from Stream. All right. GBP 80. So this is the only thing really moving right now. The ADP as the risk assets really moving. Everything else just kind of stagnant and really not giving the best possible moves right now. Obviously this could be attributed to a lot of things. From the fundamental side, we already know we have the news and stuff, and as well as, I don't know, maybe it's just the overall economy is just being kind of slow right now. We are approaching Christmas. Usually the peak is when we have the first quarter and second quarter, usually when we peak with a lot of volume and volatility from the markets. And during summer we do have movements, right? But August, September, not so much, right? It's usually a crap set of months coming closer to Christmas. It doesn't make much sense trading really. But yet we do it, yeah, right? So I don't know. This might be good conditions for some people, might be bad conditions for some. For me, it's neutral. All right. I just look at the charts. Whatever the markets decide to give me, I'll be like, hey, I'm gonna take this trade up. Besides that, not much really going on. Right. So 4-hour candle close coming in now. You just have 1 minute into that. And then we'll be able to see, okay, what are we going to see continuations? Eurocard continuations. Yeah, that's right into this level here. This is my level, right? My profit target for the Eurocard. Oh, you can see I have some pros and lows here, but obviously, like I said, dollar strength, right? So I'm expecting a break and continuation to the downside. If we do get some sort of pullbacks, then that's great. Again, for continuations to the downside, no reason to be bullish right now. You protect your levels, right? Break even stops or whatever the case is, whatever you might use. As soon as price push past this area, we could take an impulse sell, right? Impulse sell for price to continue moving down. This will be next targeted level. Do we have any fundamentals to pay attention to? tomorrow. We have some ECB stuff, we have some Euro stuff coming up, so pretty heavy Euro news day tomorrow. We have also jobless claims, initial jobless claims. Looking to see a slight increase here in the consensus. We have unemployment from the yen side of things, right? So that's later that night. I believe that's like 7:30. Sorry, so like yeah, around 7:30 or something like that. It's Thursday night. We have unemployment rate and retail sales for the yen. Right, unemployment looking to go down. Retail sales relatively the same, slightly lesser. That's what it's in the consensus. But we'll see. And then we have some more news coming up on the Friday. A lot of Euro news, right? So ending the week with a blast for the Euro. And this is something I've been watching. Yeah, the Euro CPI data. So they have the actual out already, which is interesting. So I don't know if there was like a leak or something like that, and that's why it's showing right now, displayed here. It is the previous numbers from the last, so I don't know if it's just a glitch or something like that on my FX book, but yeah, it's kind of foreboding. All right, so if we do have Euro CPI actually come out as the previous, then that should just continue seeing price push lower, right? Lower CPI just means lower of a chance of seeing any interest rate hikes. We already know that the ECB is pretty bearish in tone, right? They are pretty bearish in tone, so no real reason to be looking for buy setups in favor of the euro, at least from my perspective. That's my personal opinion. Obviously I could be wrong, maybe I don't know shit, so don't take my word for it. I'm not a financial advisor, anything like that. I'm just a guy that trades and likes, listening to news, as weird as that may seem. Yeah, but no, most definitely, if we do see the previous coming out as the actual for Friday, then we could get some Euro sell continuations. Obviously Friday is just chock full of like zero volume, so I wouldn't expect price to do too much. That's coming out at 5 a.m. so between 5 and 12 is where we'll get most of the volume, and after that price just basically ranges until the market close. So I would say is any sells that you are currently in, if you're in any Euro sells, then just hold that position as long as possible. CPI should provide some continuation to the downside. Core inflation rate as well, looking to come out. The consensus is that it's going to be down, which just kind of reaffirms that ECB bearish tone, right? So yeah, all of this is just indicating possible just a whole bearish nature to the euro, right, for the continuation of this week. We have PC data as well. Yeah, I'm not really gonna be trading Friday, so I don't know. I really don't need to pay attention to all of this until like after the fact for the continuing week. So yeah. That's about it for me actually. And next week looks pretty heavy as well. Oh, excuse me. So we have IB interest rates. We have wow, it's gonna be a pretty interesting week next week too. Wait, Friday, Tuesday. Oh, okay. Those job openings as well. I can see a decrease. So next week will be pretty interesting for real. Oh, excuse me. Right, so watch that. Say entry point, like you entered right here, boom, price come back down, close here. So you get best of two worlds. Right, and just well, this candle could start pushing bullishly first, obviously. And one thing you want to pay attention to is, all right, how the interaction, if price does push higher up, the interaction between the like middle zone of this particular zone, yeah, the middle area of this zone. All right. For me, something I've noticed as well, anytime that price pushes bullishly, so let's say we form our bearish candle for this, right? And then price starts pushing upwards, right? If it does do this sort of like this, okay, like this hammer bullshit, which usually looks like this, right? So wrong thing, I pressed the wrong thing. All right, so it's like, all right, so let's say price formed bearish first, right? But then we see that bearish candle flip coming closer to the close, right? So maybe like 2 hours to the candle close, or let's say we're looking at like 1 hour to the candle close, right? So let's say we're looking like at a 1 hour chart. Right, so when price does that, and if it does flip and it comes like bullish like this, at this point I would say like just get out the trade, If it doesn't leave no wick to the upside, yeah, just exit, bro, because that's a whole L right there. If price doesn't manage to do this, right, and leave a wick to the upside coming closer to the candle close, then you want to start, mitigating your losses, because that just means that more than likely you're gonna get a bullish candle close, right? And once you do get a bullish candle close, it usually signifies that, all right, we're gonna see that bullish momentum continue higher, right? And you see a break in that sort of zone that you were looking for to see price actually interact with and maintain, and for the continuations or whatever your initial bias was. So one key thing I would say, pay attention to how price interacts in the middle part of this zone here. Obviously, if it does leave a wick from the upside, currently it's kind of doing that. That will depend on the current hour candle close, right? If price manages to close with a wick, then I would say you could continue holding, see what price does, so forth, so forth. But if it does close bullish like this, right, at that point, I'd say start mitigating your losses, right? Just to be more conservative, especially if you're up already for the week. Then you don't need to, want to extract all the profits that you could get from the markets. It should be a little bit more conservative, be a little frugal with your trading sometimes, right? When it requires it, right? So we're seeing that on the euro side of stuff, AD cross pairs as well. Kind of pulling bullishly right now. Obviously, this is just like 8 minutes into the candle, right? So we'll pay attention to how the candle forms, whether we see, the candle flip, give us some bearish indications, and then continue with the trading. Continue with the trade that we are in, leave it as is. Or if it's time to just, start cutting our losses short, well, small, right? So this is just currently where we are. Alright, if you took the GBP AD trade and if it plays out in our favor, leave a like on this video. Alright, you guys, help support the channel. That's all I'm asking. A like is bare minimum. Would really appreciate it. I don't mean a lot. Alright, so I appreciate it if you left a like. If you left a comment, let me know that you're watching, and let me know what sort of, what pairs are you trading? What do you trade particularly? What is that interests you as a trader? Do you just trade the technicals, or fundamentals? Do you do like a hybrid trading strategy, a mix of the two? With like, let me know what's up. And I think it's really great because as a trader, there's no shortage of trading strategies that you could implement to make a profit from the market. Right? Everybody does their own thing. I see people, ICT concepts, SMC, what? Smart Raja concept, Raja smart, whatever, right? SRC and so forth. Smart Raja concepts, I think is what he called it, right? I think it was just like a party on the smart money concept. And people do all these other stuff. Me, I keep it simple. Just look at the fundamentals, look at the technicals, see when charts flowing, and over time you gotta kind of a sort of eye for these situations, right? Or situational, um, trading, where trades might go and stuff like that, right? So you have your plan and you implement it. Everybody have their own plan and strategy that they do use. People use indicators. I used to use indicators. I don't anymore. The EMAs that you're seeing right now is just to make my chart look pretty, because I really can't do with a blank chart with just nothing but just candles and some rectangle bars and whatnot. So I do have the EMAs. I just left it because, right? I used to use Bollinger Bands, RSI, stuff like that. Looking at when the RSI peaked, when price peaked on the RSI, Bollinger Bands, looking for setups using that. I used to use the Ichimoku cloud at a point in time when I now started to. So I was pretty indicator heavy. That I read naked, traded naked, naked forex. And from then I started looking at candlestick patterns, right? Looking at head and shoulder patterns using Fibonacci and stuff like that. And at one point I was like, great, they working, but can I maintain this consistently long term with like the frequency of how I do trade and stuff like that? And it was more of a hassle, right? And the thing is, you don't want to make trading a hassle. Trade is supposed to help you, free up yourself, give you freedom to do what you want, make money still, and be in control of your own time and stuff like that. So for me, I had to simplify it even more, and this is why I came to using technicals, fundamentals. Of course, my technicals is a mixture of stuff, right? But just looking at the flow, the price action and whatnot, and just implementing the fundamentals as catalysts, understanding when to enter the market, when you should exit, or when you should stay out, and the best possible opportunities for the entry points for the best possible of risk to reward that you could gain, right? And it's been working thus far. We're profitable all the time for like week by week and a week to week analysis. We're usually profitable every week. Every month we're profitable, that's for sure. And we do insane numbers within the VIP group as well. So you can ask anybody in the TrinFx Discord. That's usually how it goes. But I do encounter my L's here and there. I'm not no trading god or guru or anything like that. Obviously not. Else I wouldn't be YouTubing or anything like that. I'll probably be somewhere in the Bahamas. So I don't know. Bora living my life. But yeah, I do encounter my losses here and there, as every trader does. But it's really great that we're able to learn from each other. Maybe you might be able to see something that others may not see, or gain some knowledge from somebody else. So it's really great to have a community where you could, talk to like-minded people. Even though you do have different ways of doing things, the goal is the same, right? Use trading as a source of income to be able to do what we want to do most in life, or help us just get by, or whatever the case is. I think that's great. That's great that we could use this to our advantage to really help us do that and achieve that. All right. So I think I'm gonna call it here. Wow, look at that. JPY pushing up. And I don't know, maybe it might continue moving up, maybe it might pull down, who knows. Obviously we didn't get ourselves in that situation, so we're safe. Right now price doing what it wants, and we leave it, let it do its thing. So here on GPAD, my advice to you guys, if you have taken this trade, is wait till the candle close, obviously, right? If the candle does close lower, hopefully, depending on how this fall candle forms, right? We did get this pull below the zone, which is great. So this area is being maintained. So looking at the current 1 hour candle, if price does manage to pull lower, then you could set a break-even stop on the second entry point here. And depending on how low that does go, you could set a break-even stop on the first entry point here as well, right? Or just reduce your risk over time, right? That would be great as well. A great strategy to help you manage your risk for the current trade setup. So that's it thank you guys so much for joining in. I really do appreciate your patronage. Obviously, if you found this enjoyable, you learned something, you're able to get some little profits off of it, then leave your boy a little like. I do appreciate it. It really helps the channel with growing and get it out there, recommended, and people who might find this useful. And I just want to help everybody grow as a trader and just use this to their advantage. And if I could help facilitate that, then that's great. And yeah, I wouldn't say it's like my calling or anything like that, but if it's something that I could do to help others, yeah, that's all that I really need. So that's it. Thank you very much for joining. Let's see if I do remember how to take this off without actually going to anything. Alright guys, so I'll keep you updated on the current trade setup in the Discord. If you're part of the Discord or the Telegram, then you know what I'm talking about. If not, use the links in the bio, use the links in the description, right? And join in. It costs you nothing. It costs you nothing to join a free Telegram and a free Discord. Nothing at all. Alright, but don't come expecting me to be making you millions or anything like that. It's not happening, chief. Alright, peace.